when a currency is no longer able to, like a government is no longer have enough power to manage its own ledger, it gets kind of forcibly dollarized. So whether it's Argentina or Lebanon to varying degrees, people start protecting themselves by gravitating towards other monies. Now the question is, what happens when the U.S. and Europe and Japan, what happens when these major currency blocks themselves have fiscal spirals? Right now, I think what this technology does is it gives people more choice around the world. It kind of breaks these monopolies, allows the more global competition of money again.
Lyn Alden is a renowned financial and macro analyst, an investment strategist, and an unwavering enthusiast for Bitcoin. Amidst the prevailing excitement and optimism surrounding the potential approval of a spot Bitcoin exchange-traded fund, Alden recently delved into an even more significant and bullish topic: the broader global adoption of Bitcoin and various other cryptocurrencies. During a recent interview on the Bankless podcast, Alden highlighted a pressing matter that, despite temporarily taking a backseat to ETF fervor, is of utmost concern: the gradual erosion of the global fiat monetary system. According to Alden, this issue, while currently more pronounced in emerging markets, is on the brink of spreading to major economies like the United States. In her interview, Alden examined the ongoing economic challenges in the United States, foreseeing a substantial downturn in the coming months, potentially leading to a severe recession impacting all sectors of the economy. However, she identified inflation and monetary devaluation as the primary challenges facing the U.S. economy. Alden acknowledged that the U.S. is caught in a debt spiral, and the only apparent remedy is printing more money. Nevertheless, this approach poses its own challenges, as excessive money printing contributed to the current situation and could exacerbate future problems. Alternatives such as increasing government revenue or implementing austerity measures are difficult to implement in the United States. Alden further explained that with the ongoing devaluation of fiat currencies, an increasing portion of the world's population, particularly the working class, will likely turn to cryptocurrencies to safeguard their wealth. This shift signifies the growing adoption of cryptocurrencies like Bitcoin, potentially leading to substantial price increases and rapid development in the crypto industry.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So as we encounter the global financial crisis, and then as we encountered the 2020s, COVID crisis, fiscal crisis, I do think we're entering the later phases of this current era. I don't think it's going to end next year. I think it's network effects generally take a long time to be competed with, but I think we're entering that now. I think there's more geopolitical alignment against that. They still have their headwinds, but there's more adamant pressure to do something about it. And then two, these newer technologies have enabled new ways to go around it, or ironically, new ways to extend it. And so I would say that digitally native money is both good for the dollar and bad for the dollar, depending on what time frame you look at. So the invention of Bitcoin is basically the invention of fast digital settlement. So it's saying, okay, for centuries, we keep making money faster by centralizing it and making it more efficient that way. Well, here's a way to have a shared ledger that's decentralized, right? That's basically the invention of Bitcoin and related technologies. And so one of the capabilities that has is that as these digitally native monies grow in awareness and adoption and size and liquidity and better technology, they can pierce these 160 different currency bubbles in a way that prior types of money cannot. So for example, if you were in Argentina and you want dollars, it's hard for you to get your hands on dollars because Argentinian can kind of block, they can control dollars flowing in and out of the airport. They can tell banks what they can or cannot do with dollars. And so, getting a dollar on the street, you're going to pay a lot more for it because it's very hard to get. They're very scarce. Same thing for many other countries. Whereas, say, stable coins can pierce in there more readily digitally than physical dollars can. And so on one hand, you have, like, for example, BRICS countries and other things trying to de-dollarize in a way. From the top down, but from the bottom up, when you ask people on the street, what currency do you want? They generally want dollars. They don't want Chinese yuan. They don't want Indian rupees. They generally want dollars. That's even in those like street markets, black markets, gray markets, the most liquid saleable outside currency tends to be the dollar, at least in most countries. And so tokenizing assets like the dollar or like the T-bill, for example, is a way to push that into these countries, and where there is a strong, natural, organic, bottom-up demand for it, for lack of anything better. They might hold gold, but they also want dollars, for example. And so these technologies that kind of perforate, they break the borders, the financial borders that countries have been able to build around themselves. My expectation is that those are going to keep being frayed. Those are going to keep weakening over time as long as this technology keeps getting better and people get more and more awareness of it. And so I think this current era of like 160 different local currency monopoly bubbles is increasingly untenable. And what you generally see is when a currency is no longer able to, like a government is no longer have enough power to manage its own ledger, it gets kind of forcibly dollarized. So whether it's Argentina or Lebanon, to varying degrees, people start protecting themselves by gravitating towards other monies.
Currently, the problem of currency devaluation is most pronounced in emerging economies. However, Alden believes it's only a matter of time before this issue becomes a global concern. Numerous emerging countries worldwide, including Nigeria, Egypt, Lebanon, Argentina, Sri Lanka, and Zimbabwe, are grappling with crippling levels of inflation and an alarming rate of currency devaluation. To illustrate, just 8 years ago, the Nigerian naira was trading at less than 200 naira to a dollar. Today, it exceeds 780 naira to a dollar. Additionally, Nigeria faces one of its most severe inflation rates in over 2 decades. Egypt has been forced to devalue its currency twice in the same year, with another devaluation on the horizon, despite its citizens contending with over a 30% surge in the prices of goods and services. Alden asserts that this could soon become the reality for many developed countries if their governments continue unchecked money printing. She envisions a scenario where currencies currently in dire straits will have completely eroded by that time. Returning to the interview, the macro analyst delves into the early indicators that suggest America and other developed nations might face a similar fate in a few years, highlighting the significance of cryptocurrencies in this new era.
So even those systems are not stable. As the United States digs itself deeper and deeper into a negative net international investment position, as our public debt as a percentage of GDP keeps increasing. And, one thing to consider is that for like 40 years, the United States was increasing its debt to GDP. So we went from 30% debt to GDP up to 120% debt to GDP from, say, the end of the 1970s until the beginning of the 2020s. But that was actually somewhat sustainable because interest rates kept falling. And so if interest rates fall from 20% to zero, you can increase your debt without increasing your interest expense, at least relative to your income, relative to your GDP, relative to your tax revenue, however you want to define it. But the instability of that system starts to reveal itself once you get down to zero interest rates, bounce along that for a while, and then start to increase from there again, right? Because there's no longer an interest rate offset to the rising debt. And so now interest expense in a lot of these countries is starting to become a major problem. And central banks can lose control of the rate of new money supply growth because all of their tools are designed to slow down bank lending. They're not designed to slow down large government deficits and interest expense. And so as the bigger currencies become unstable, I mean, that's where we go through the looking glass. That's the future. Like what's going to win? What's going to outcompete the dollar? Is there a Bitcoin future in our, is there like an orange future in our path? I know you guys would probably say another currency, Ethereum, but whatever the case may be, right now I think what this technology does is it gives people more choice around the world. It kind of breaks these monopolies, allows the more global competition of money again. In the near term, that can ironically be good for the dollar because it allows dollars to enter these jurisdictions more readily. But in the long run, as the dollar itself becomes unstable, you have scarce bare assets that are basically digital gold, digital money, scarce money in a digital age. The weaker currencies are going to increasingly face dollarization pressure because now they not only face it from physical dollars, they face it from stable coins. At the same time, the major ledgers, including the dollar, I think are going to take on some emerging market characteristics. But what I mean by that is that as debt as a percentage of GDP keeps increasing, as these countries run structural trade deficits and enough political polarization to prevent any sort of realistic way to reduce those deficits or fix those deficits, And as you no longer have the offset from declining interest rates and globalization. So part of why interest rates were able to go down for 40 years is that that was also the era of globalization. So China opened up to the world starting in the 80s and especially the 90s. The Soviet Union fell in the early 90s. And so basically what we did was we brought Western capital and Eastern labor together. And that was a kind of a renaissance of production, of keeping costs down, of synergies. It was a very disinflationary force. Some people benefited from it, some people were hurt by it, but it was enabled prices to go down, disinflation to go down, interest rates to go down. That era seems to be behind us now. We've already kind of tapped into that connection. Now we face more frictions in the world. And even China has demographics issues, right? So now we've kind of ended that era. And now we're in an era where debts are still rising, interest rates are sideways to up. So there's no longer that offset. So government interest expenses, I think, are going to keep increasing at an alarming rate. And that's a source of new money creation. That's money that kind of pours into the economy. And so I think we're going to have to be ready for like higher average background levels of inflation. Maybe in a recession, it cools down a little bit, but then when we come out of the recession, it heats back up.
During her interview, Alden envisions a troubling scenario where higher levels of ongoing inflation become an everyday reality for Americans, similar to what Egyptians and Nigerians are experiencing today. According to this prominent financial analyst, this grim future could become a reality in as little as 5 to 10 years. Alden is confident that, when this transition occurs, even those who were previously skeptical will have no alternative but to shift toward cryptocurrencies like Bitcoin. However, she adds that nation-states will vigorously resist this change and employ various tactics to impede the transition. Nonetheless, Alden believes these efforts will prove futile. She highlights the example of Nigeria, where the government attempted to sever the crypto industry's access to banking services and introduced the central bank digital currency, which did not succeed. Nigerians continue to actively trade cryptocurrencies and use stable coins to safeguard their wealth. She invites readers to share their thoughts on Lyn Alden's interview, encouraging them to provide comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.